Hi guys, it's Arab the blogger and welcome back to the channel. And in this video, I'm talking about the easiest cryptocurrency day trading strategy. One of the requests I get a lot is talking about how to day trade the cryptocurrency market without having to hold a coin for a very long time and trying to hold the coin to a bull market. How can you make money every day from the cryptocurrency market? And that is what this video is all about. So in this video, I'll be talking about how you can start making money from the cryptocurrency market, which platforms do you use to do day trading, how do I analyze the market using my technical analysis strategy, how do I identify coins that have enough liquidity for me to be able to do day trading in the cryptocurrency market, which platform do I use to trade the cryptocurrency market, and stuff like that. So all these things would be talked about extensively in this video. So ensure you watch this video to the end and also smash that like button so that it gets to a lot more people and they also benefit from it. So let's get right into it. This video is strictly for educational purposes and no part of this video is meant to be a financial advice. So take note of that. The first thing you have to do is to choose an exchange where you trade. And for me, I actually have some exchanges I used to trade, and I have a video I made explaining my 4 best exchanges in the cryptocurrency market. But for trading, I usually use Bybit because it has a reasonably low fees, a lot of cryptos listed on it. It has a demo trading platform where you can do demo trading and practice. Maybe you want to backtest your strategy, you want to formulate a new strategy. I usually choose Bybit to do majority of my trading, and it's very important that as a trader, as a day trader, you choose a platform that allows you to trade most of the coins that you want to trade in the cryptocurrency market. And after choosing that platform, then you are good to go. The next thing you have to do is to choose cryptocurrency pairs to trade. So now you have known the platform you want to use to trade. Then you use, what are you trading actually? And when it comes to day trading the cryptocurrency market, I always advise you trade some particular coin that are high cap coins. And what I mean by high cap coins are coins that they have a very high market capitalization. They are been in the market for a very long time. They have come after every bear market to prove that they are here to stay. They have a lot of investors investing in them. They have some reasonable use cases, and they have a lot of companies that back them up. They have strong fundamentals behind them. The reason for this is that those coins have low volatility. Fine, they have volatility. Every crypto coin is highly volatile, but their volatility can still be maintained, and they have a very high liquidity in them. So to choose this coin, all we have to do is go to www.coinmarketcap and look at least the top 30 or 40 coins by market capitalization. Those are the coins I usually advise you to do to trade as a day trader. You don't want to be trading coins that have very low market cap, because those coins can go from 0 to 100 within a few minutes, and those coins do not respect most of your technicals, because when it comes to day trading, you actually need more of technicals than fundamentals to do day trading. So these coins that I'm talking about are high cap coins that you have to use, and they respect technicals a lot, and you can actually analyze the market and trade them easily without having the fear that they can just skyrocket in price anytime, defying your technicals, and they can also dump hard anytime, define your technicals. So when you trade Bitcoin, Ethereum, Litecoin, BNB, Polkadot, Matic, and all those coins that are high cap coins that are in the coin market cap, you know that you are rest assured that you can actually trade them easily and make money without much stress. The next thing you have to do if you want to day trade cryptocurrency is to identify the market trend. Market trends are 3. We have the uptrend, we have the downtrend, and we have the ranging market. Uptrend is a market where you have series of high highs and higher lows, which means the market is going up and up. So after every pullback in an uptrend market, we expect the market to make a new high. And a downtrend is a situation whereby you have a lower high and a lower low, which means the market is going down, and anytime the market reverses a little bit, we expect it to tank more and go more down. So in an uptrend, you want to be looking for opportunities to buy or to take long trade if you are doing futures trading, and in a downtrend, you are looking for opportunity to sell the market. The third trend is the ranging market. We call it a range or a sideways trend. A range or a sideways trend. A range or a sideways trend is a situation whereby the market is choppy and is not moving in a clear direction. The market is moving up, down, without moving neither in an uptrend or in a downtrend. So right now, I'm going to go into my screen, and then I'll talk about uptrend, downtrend, and how you can actually analyze the market to do a proper day trading in the cryptocurrency market. Alright, so welcome back to my screen. So now we are talking about how to day trade the cryptocurrency market and how to analyze the market. So I talk about the trend. So let's talk quickly about trend. This is Solana US dollar. Solana is one of the biggest coins in the cryptocurrency market, more like one of the top 5 coins in the cryptocurrency market by market cap at this particular time. And Solana has been an uptrend since around 2023, and Solana actually crashed a lot in 2022. Right, and I said it on my WhatsApp back then that Solana is going to rise from the ashes and prove everyone wrong. And Solana is actually proving everyone wrong at this time. So Solana has been an uptrend. So now the first thing is identify the trend. You want to trade, identify the trend of the market. Now, you want to trade Solana. You want to understand that is it in an uptrend, downtrend, or in a range. So this Solana 1 hour time frame. And what we mean by uptrend is that the market is creating a series of higher highs and higher lows. Something like this, right? So anytime this is higher high, higher low, higher high, higher low, higher high, higher low, higher high, and like that. So this is what an uptrend means. So uptrend is because the market does not move in a single movement direction. You can never see any market move like this. No, it doesn't. So it will always move in something like this. And that is also what we have on our chart. If you look at our chart, you see that market started from this. This is a high, low. This is a higher high, higher low, higher high, higher low, higher high, higher low, right? Higher high, higher low, higher high, higher low. And that's how the market moves. So market is an uptrend. It gives us a series of higher highs and higher lows. And that is the market structure, right? So the market structure is telling you what direction is the market moving to. And I actually have a separate video on market structure that is very elaborate, and I'll link that in the screen below. You can actually watch that. So now you have to identify the market trend. So this is an uptrend. So what does a downtrend look like? A downtrend simply looks like this. So let's say the market is creating lower highs and lower lows. So now let the market start from this place. Low, high, lower high, lower low, lower high, lower low, lower high, and lower low. So that is what a downtrend simply looks like. So if you look at the market of Solana back then, when the market was crashing, you can see this point. At this point, that was like May 2024. You can still like navigate back, right? I was trading Solana at this particular time. Right, the market was in a downtrend this time. You can see we are having at this particular point, we are having the market giving us a series of lower highs and lower lows, lower highs and lower lows, and that was back then in April of 2024, right? So that was when the market was in a downtrend. I was shorting Solana at this particular point. So now let's get back to where the market is currently is. So the market is currently in an uptrend. So once you want to day trade, the first thing is identify the trend. So the trend is uptrend, right? So after identifying the trend, so sometimes you have a choppy market, and that is the third trend I mentioned earlier, which is like a sideways trend. Where the market is doing something like this. When the market is doing something like this, it's not moving in a clear direction. It's not moving, it's not going up per se, and it's not coming down per se. So that is a choppy market. That is a sideways trend. But now we have a series of higher highs and higher lows in the market right now. So now, after identifying your trend, after knowing where the market is going to, whether it is up or not, then you do a top-down analysis of the market. Top-down analysis simply means you want to look at all the criteria, all the factors in the market to determine what you are going to do, right? So now, top-down analysis includes, I actually have a video, a comprehensive video on how to do top-down analysis. You can look for that on my channel, and I'll also link that in the description below. So top-down analysis means after you have identified the movement, the directional movement, you draw some key levels, right? You can see this place is actually a key level on your chart, right? Which means it is an area of support or resistance where the market has respected. You can see I have drawn this one as far back as early this year, right? This is 155, but we don't want to be talking about these black lines now because the market has moved past all those lines. So now we want to be identifying the immediate areas of value on the chart. So you can look at something like this. You can actually call this an area of value. Sometimes I don't use this line to draw it. I use this box to get the most of it. So now you can look at something like this. This is actually an area of value. The market has respected a couple of times. So I just draw it and drag it like this. So now this market is in a clear uptrend. Now, you look at, let me just get rid of all these lines, right? Perfect. So now we look at the market and see where the market has actually respected in the past. And if you look at this, you will see that this particular area I just draw now can date back to this area. That is how you identify, actually how you do analysis of the market. This shows that this particular area is an area that the market always respects in the past. So now, the market is in an uptrend. You expect higher highs and higher lows. And looking at the market structure, you will see that the market has given a higher high. All I am expecting now is for the market to pull back a little bit, right, to somewhere around here. And then from this place, I look for entry triggers. Or if the market does not pull back to this place and continue more down, I can just look at something, a pullback here. So I'm expecting two things. Either a little bit of pullback or a pullback into this area of resistance that has turned support. So I actually make a video about support and resistance too. You can also find that in the description box below. I like it when I explain this briefly. Then I have another video where I explain it extensively. So you can watch both of it, compare it and juxtapose so that you can actually find the best trading strategy out of it. So now I'm looking for two things. It is either the market gives a higher low. And what I mean is that when the market gives a higher high like this, I want it to give a higher low, right? Then it's continue higher low, then it continues shooting up. So that is, I'm expecting something similar from the market right now. So I'm expecting that this market is actually reverse a little bit more, and then give me a new higher high towards 200, right? If that does not happen, because market works in probabilities, you can't say this is exactly what is going to happen. Then I expect the market to now maybe push back to this area of resistance, right? Pull back to this area of resistance because it's a previous resistance that has turned to a support. So now it's a support, right? Pull back to this area of support before it starts moving up. But in this kind of scenario, I only want to be looking for buying opportunities because the market is in an uptrend and I don't want to be taking short. They always say the trend is your friend. You don't want to be trading against the trend, right? So that is a quick top-down analysis of what I'll be doing, right? So now, when the market pulls back, I don't want to enter immediately. I don't want to jump into trades. The reason why I don't want to jump into trades is that at this particular point, if you want to be taking trade at this particular point, there is actually a tweezer bottom candlestick here that signifies that the market is about to move, right? If you look at this particular point I'm highlighting, it's actually a tweezer bottom candlestick forming right here, telling you that this market is about to shoot up. So I'll be expecting another candlestick formation somewhere around my area. So now I said I want the market to drop to somewhere around here or this particular area, right? So when market get to this particular area, I expect to see an entry trigger, which is more like a candlestick formation, telling me the market is about to continue to shoot up. You don't just enter a trade because, no, fine. If you enter the trade here, where do you put your stop loss? That's the first question. You don't want to put your stop loss anyhow in the market. So you want to put a stop loss to get high probability trade. And that's what I preach. I preach high probability trade. So to get high probability trade, I might want to be looking for the market to come back to this place. So I'll be doing something of this nature. If I want to be longing from this area of value, my stop loss will be just a little bit below the range, and I'll be targeting a new higher high. So this is going to give me a high probability trade on the market, right? So I'll be risking something very small to be targeting something very much higher. So where do you put your take profit? You actually put your take profits at the next area of value. So all you have to do maybe like scale back here and put this line. This is an area of value here, right? If you scale back and travel back into time, you see that there's an area of value here too, right? And perfect. I think those are the ones we have for now. So now all you have to do is go back to the current place where the market is in right now and see that those are potential targets for you in the market. So it doesn't mean that during this movement, when the market is doing this movement, it won't like maybe reverse and do all those kind of reversal. But I want to be targeting a high probability trade, but this is actually not going to be a day trading strategy. So if you want to do a day trading strategy, you actually have to scale back to something like a 15-minute time frame for you to be able to get your entries and exits. So now, in a 15-minute time frame, you see that this is a very long movement that may not happen within a day. And you know, when it's come to day trading, you're actually talking about something that's going to happen within a day. So you have to like come back. If you get your entry from this point, your target should also be around this place. And that is the realistic thing that can happen within a day. But if you do not get your entry from this point, you probably get your entry from somewhere around here, right? Then you want to be taking your trade from that particular point. Then you have a very tight stop loss because of the fact that market can actually reverse more, doing what I had initially projected, and you set your target around 1:2 and 1:3. That is a realistic target for a day trading, because if you are day trading, you know your time span is within a day, and that is the realistic thing to do. So that is actually how I day trade. I actually find entries and exit on the lower time frame, like 15 minutes or even 5-minute time frame. Then I start the top analysis from the 4-hour. 4-hour tells me, 4-hour or 1 hour tells me what is directional movement in the market. Is the market in an uptrend or downtrend? Then after the 4-hour and 1 hour, I analyze the market and look at, okay, what are the areas where I want to be trading from? Then after that, I now look at entries on the 15-minute or the 5-minute time frame. That is a simple way to do day trading in the cryptocurrency market. So you can actually watch more videos I did about top analysis to be able to get out of top analysis. And also I have an extensive video on technical analysis, which is like a 1-hour video where I talk about all these concepts one after the other. So I will link that one also in the screen below. So make sure you watch that and benefit from that. So guys, you're welcome back. In this video, we've talked about the platform you can use to trade, the coins you should do day trading for, and also how you can analyze the market to do a proper day trading in the cryptocurrency market. If you have value from this video, ensure you smash that like button, subscribe to the channel, let me know in the comment section what you gained from this video. And also, if you have a topic from cryptocurrency or forex trading that you want me to cover in this channel, ensure you put it in the comment section and I will look into that and make a video about it. See you in the next one.